Hello, it is the 17th of November 2010. Welcome to today's silver analysis. And I'll put up this chart first, which is the price memory history. Then we'll go to the silver price chart. And this clarifies how often silver trades at a certain price, at least since the rally began back in the month of August, working from $19 an ounce and 29. This is based on the 15-minute time frame, so if it closes within these variables at the 15-minute mark, the 30-minute, 45, and top of the hour, it will count to whichever degree it is. And it's in a 50-cent differential for each bar, which pretty much means, say at the 26.50 here, that's between 26 and a quarter and 26 and 3/4. And we had much higher price memory before 25, as we can see that these bars quite large in comparison to the ones that we are currently facing, which is within the 25, 26 handle, and not so much towards the 28 level, showing us that the time we traded within the 28 level was fairly brief in comparison to the other prices that we have traded at. Now, whether this chart means anything for making trades, if you can find a way, well then good luck and congratulations to you. But what this is telling me is that we've been having this pullback, we've been developing price history in towards this 25, 28 level. What I would like to see happen doesn't mean that it will, is for silver to trade within a 25 to 30 range, maybe over the next 5, 6, 7, 10, 12 weeks. That doesn't mean that it will. Markets don't care what I want or what I think what actually happens is what's going to happen. But just a little quick look at the price history for where silver traded at. And this is that 15-minute line chart. I was mentioning a bounce at 25 because it had many big different variables to it within the 20-day moving average, within the 38.2% Fibonacci on the linear level, from the 29 1/3 handle down towards the $18 breakout, and that was also an area where we had previous resistance. Even though you can't see it here, it did touch it on 2 occasions back in the middle of October. So that was big level that support should have been found. I even had somebody say it was part of the Elliott wave theory, and at least by calculated moves, it makes sense that that would be an area where we'd have at least some sort of bounce, and we have had some sort of bounce. If this is it, or maybe we range between 25 and 26 for a few days, it won't be that big of a bounce, but it would be a significant enough one to say, hey, we did find some level of support at that 25 level. I think the odds still favor that it's going to hold for some bigger rallies, but until, of course, the charts can show otherwise, it is still in that of an intermediate term bear market. We have yet to have had a test of this declining 5-day moving average, which is still fine. It just means that the first time or the next time that we get up there, the odds are likely that it will find some sort of resistance at that level and will continue its selling trend. Now, if it does manage to go up towards it and meet up with the 5-day moving average, what you would like to see happen on a bullish scenario is maybe retrace 38.2 to 61.8% of the move from 25 to wherever it happens to meet, and then establish a higher low. And then when it comes back towards the 5-day moving average, the likelihood it is able to take it out would also increase, because the more often resistance and support is tested, the more likely it should be taken down. Which means if we have more tests of this 25, the likelihood it gets taken out would also persist. We had that test yesterday. It also came back earlier in the morning, or we'll say at November 17th London time or Australia time, I don't know, early in the morning. It came close to 25, and we've pretty much had 2 tests of that level. It wouldn't be much of a surprise if it were to find a range between this 25 and 30 level maybe we come up to 28, fall back down to 26, back up to 29, back to 25.50, and do that for a few months, sort of like what we've seen in the earlier part of the year when we were trading within a range of 16 and change and 19 and change. It's a possibility. It doesn't mean that it's likely to happen. But if it continues going lower, it would pretty much be a repeat of 2008 if the Dow Jones manages to not only go below 11,000 but even 10,000 again. That could very easily mean that silver could follow suit. And that could mean test not only towards this volume weighted average price, but more so towards this 50-day moving average, which is currently roughly around the 23.5 area, and it's also rising each day too. So that's an area that if we continue to break down, it is likely to be the next key support area. Now, as far as any type of trend lines are concerned, this one seems to be one of the more legitimate ones that we are in, and breaking this trend line once again, that brings us down to 25, which is just it's a pretty decent size level. And then on the way up, there's loads and loads of resistance. I've obviously mentioned the 5. The 10-day moving average is now going to be starting to flatten out and going lower, and the volume weighted average price from this high, you got this previous support, which was resistance yesterday. So the more often that you test it, the more often it would break it above it. So that could be from this higher low, give it a higher chance of breaking this 26 handle. As far going above 26 and any of the moving averages, that is, you got this 26.5 level, which was the big move that the original crash took us to, which was also resistance towards here. And then you got the 27 and change mark, and you also got some Fibonacci numbers. I posted them on the blog on Tuesday from the 25 lows and the highs that are a little bit above the 29 mark. Because we have these pattern of lower lows, we have these lower highs, we need to start to see something for this trend to reverse. The odds, I think, are fairly good that it still will, but just because I think it's going to, because of the Fibonacci numbers and all the other technical indicators I was describing as the big support level within the current trend of a bull market, just because I think that's going to be the case doesn't mean that it absolutely will. The market doesn't care what I think should happen, and in reality, the market a lot of times doesn't care what the price should be within a fundamental level. We've seen so many times different prices, whether it be precious metals, whether it be any type of stock, that you know what, it's up or it's down way too much than it should be. And if you're able to find those situations, then you're doing pretty good. You see a stock that's up way too much, then if you have some of it, maybe you want to sell that stock or that fund. Same thing if it's down too much, maybe you want to buy it, which is why this JP Morgan crash and buy silver viral, I'm trying to think of the word, it's just a community spreading the message on why it was been shorted so much, thus making it down so much right now as the inflationary values exceed. Some people say 70, 80. I don't see silver being manipulated that lightly in my view. Like, once again, doesn't mean that I'm right, but from the research that I've done, it does seem likely as if that big push is going to happen within the next so many months. Now, whether it happens this month, next month, January, February, March, that can be extremely difficult to try and predict. After all, you have big moves going from 21 down to 9, back over 30 in less than 2.5 years. That can be extremely volatile. And what is planned within the silver market from the market makers, if you will, is very difficult to figure out sometimes. I'm going to finish off this video at this, making it a 10-minute video. If you haven't entered the silver contest, please do so, and thank you for watching. Take care, everyone.